A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a stunning turn of events, Donald Trump has secured his place as the 47th President of the United States, defeating Kamala Harris in a closely watched election. As Wall Street braces for the implications of his return to the Oval Office, investors are already speculating about potential tax cuts, deregulation, and a more aggressive stance on tariffs. Trump's campaign heavily emphasized economic issues, with many voters citing the economy as their primary concern. The promise of lower taxes and reduced regulations has sparked optimism among investors, who are anticipating a pro-growth environment that could drive up asset prices. David Bianco, the America's chief investment officer at DWS Group, noted that the markets are viewing a Trump administration as favorable for growth, even if it comes with the trade-off of higher inflation and interest rates. The recent projections from Edison Research indicate that Trump has crossed the crucial threshold of 270 electoral college votes needed to claim victory. Historically, political developments can influence market dynamics, but investors are keenly aware that macroeconomic factors and corporate profitability often play a more significant role. During Trump's first term, the S&P 500 surged nearly 70%, driven largely by a boom in technology stocks, even as his tariff policies introduced volatility into the market. However, the economic landscape has shifted since 2016, and some analysts caution that past performance may not serve as a reliable indicator for future market behavior. The U.S. economy has shown an annualized growth rate of 2.8% in the third quarter of 2024, compared to just below 2% in 2016. Additionally, while inflation has been curbed from its peak in 2022, there are concerns that Trump's proposed tariffs and tax cuts could reignite inflationary pressures. The potential for increased tariffs, particularly a proposed 10% hike on imports and 60% on goods from China, is a significant factor that could shape investor strategies in the near future. A study by Deutsche Bank suggests that if tariffs are avoided, Trump's presidency could add about half a percentage point to U.S. GDP. Conversely, implementing these tariffs could detract from economic growth. Market participants are left to ponder how aggressively Trump will pursue these tariffs, especially since they can be enacted through executive action regardless of Congress's composition. In addition to tariffs, Trump has called for sweeping tax reforms, including a reduction of the corporate tax rate to 15% for companies manufacturing domestically. While such tax cuts could boost corporate earnings and investor sentiment, they also raise concerns about the federal deficit, which has been a growing worry among investors. Estimates from the Committee for a Responsible Federal Budget indicate that Trump's proposed tax and spending plans could increase the national debt by approximately $7.75 trillion over the next decade. As the markets react to Trump's victory, U.S. stock futures have shown a positive response, with major indexes rising by over 1%. Bitcoin also reached a new all-time high as the election results began to favor Trump, highlighting the speculative nature of the current financial environment. Trump's return to the presidency means a revival of many of the policies that characterized his first term, including a focus on immigration and deregulation. On the campaign trail, Trump made bold promises, including launching the largest deportation program in American history and repealing executive orders issued by his predecessor, Joe Biden. His rhetoric on immigration has resonated with a significant portion of the electorate, and he has positioned himself as a champion for law and order. As Trump prepares to take office once again, the implications for the U.S. economy and financial markets remain uncertain. Investors will be closely monitoring his administration's moves on tariffs, taxes, and regulations, as these factors could significantly influence market dynamics in the coming months. With a divided Congress still in question, the extent to which Trump can implement his agenda will be a focal point for both investors and policymakers alike. The coming weeks and months will undoubtedly be pivotal in shaping the economic landscape as the nation looks toward a new chapter under Trump's leadership. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.